Take page number 31, Fundamentals of Partnership.
Page number
31, dear. 3-1. Fundamentals of Partnership. 3-1.
Okay.
Yeah. We were doing past adjustment in the last class. Now, what is the meaning of past adjustment? Very important. In board's 4-mark questions, damn sure comes. So, try to understand the concept. Very, very easy. Always remember, whatever is the income for business, it is always the expense for the partners. For example, you can take any expenses of the business. For example, interest on capital. Interest on capital is paid by the business to their partners. So, in PL appropriation account, we show interest on capital in the debit side because it is expense. But if you think from partners' point of view, they receive interest on capital from business. So, it is income for partners. In partners capital account, in the credit side, we show by interest on capital because it is income for the partners and it increases the capital. In the same way, suppose salary. Any salary is paid by the business to their partners. Again, paying salary to partner is expense for the business. We show it in the debit side of PL appropriation account. On the other hand, in partners capital account, for partners, receiving salary from business is an income. So, we show it in the credit side of partners capital account. In the same way, any income for the business is always expense for the partners. How? We can prove it. Interest on drawings. Who pays interest on drawings? Partners pays interest on drawings to the business. So, for business it is income. Whatever amount partner pays to the business is always income for the business. Interest on drawing is paid by partners to the business. So, we show it in the credit side of PL appropriation account because income for the business. On the other hand, in partners capital account, whenever partner pay anything to the business, it is expense for partners. So, it reduces the capital of the partners. So, in partners capital account, interest on drawing is always shown in the debit side to interest on drawings. Understood, Roshni? This concept is clear to you?
Yes, ma'am.
Okay. Amrita, good evening, dear.
Good evening, ma'am.
Good evening, dear. Take page number 31, Fundamentals. 3-1, past adjustment we are going to start. P1. Sorry, 31. What I am telling. So, we will see the first question of past adjustment. A, B, C are equal partners. So, A, B, C are the 3 partners in a business, and equal partners means whatever profit or loss business earns, it is distributed equally among the 3 partners. And started business with rupees 8 lakh and 4 lakh and 2 lakh. Started business. You have to understand the wordings in accounts. Whenever they say started business means capital. With the help of what we start any business? In order to start any business, we need capital. So, started business means they are talking about capitals. So, A has 8 lakh rupees capital in the business. B has 4 lakh capital in the business. C has 2 lakh capitals. After the closure of books. Now, what is the meaning of after the closure of the books? When book of accounts are closed every year? 31st March. Every year, 31st March, business prepares final accounts, trading, PL and balance sheet. So after closure of books means after preparing the final accounts, that is after 31st March. It was found that IOC means interest on capital, at the rate of 10% was omitted. Pass necessary entries. So 10% interest should be paid to the partners, but business did not pay. Now it has been omitted. When this error of omission was found? After preparation of final accounts. Once the final accounts are prepared, that is trading account, profit and loss account and balance sheet, again and again we cannot prepare final accounts. Only once final accounts are prepared. But there was a mistake. Partners should get interest on capital as per the partnership deed, but business did not provide them. It was omitted. Now we have to rectify this mistake. So we always pass one adjustment entry. That is only we are going to learn. For that we have to prepare adjustment table. This is a question of past adjustment. Past adjustment means after preparation of final accounts, there will be some error, omission, anything in the business that should be corrected, rectified by passing one single journal entry. That is only we are going to learn how to do that. Always prepare adjustment table whenever past adjustment question comes. What is this adjustment table? Very simple. Write particulars. How many partners are there? 3 partners, A, B, C. So prepare 3 column, A, B, C and 1 for total column. Now you have to focus on concept. This A, B, C, imagine that these are the capital accounts of partners. Imagine A, B, C are partners capital account. You have to imagine. And total column is the PL appropriation column. Again I am repeating. A, B, C in this adjustment table, imagine it as partners capital account, and total this column imagine as PL appropriation account. One important concept, again I am repeating, try to understand. Whatever the business pays to the partners, for example salary, bonus, commission, interest on capital paid by business to their partners is expense for the business. So we always write interest on capital, salary, bonus, commission in the debit side of PL appropriation account. But for partners receiving salary, bonus, commission, interest on capital from business is always income, because partners are getting salary, bonus, commission, interest on capital from business. It is income for the partners. It will come in the credit side of partners capital account. Why? Because anything which increases capital, we write it in the credit side. So whenever business pays anything like salary, bonus, commission, interest on capital to the partners, this amount increases the capital of the partners. So we write it in the credit side. Now what about the second thing? Second means like any income for the business. For example, interest on drawing. Who pays interest on drawing? Partners pays interest on drawing to business. So for business it is income. Interest on drawing is paid by the partners to the business. So business is receiving interest on drawing from partners. It is income for the business. So where we will show? In PL appropriation account, all incomes are shown in the credit side. So in PL appropriation account, in the credit side we show by interest on drawings, because it is income for the business. Now think from partner's point of view. Interest on drawing is paid by the partner. So for partner it is expense. For business it is income. So when you prepare partner's capital account, we show it in the debit side of partner's capital account. To interest on drawing, to drawing, all these things reduces the capital of the partners. That is why we write in the debit side of partner's capital account. Always these two things goes in opposite direction. Income for the business is always expense for the partners, and income for the partners is always expense for the business. You can check it. So for any doubt, Amrita, Roshni, any doubt you are having in this concept?
No, ma'am.
Okay, fine. Now we will see. In this question they are saying interest on capital is not provided to the partners. So very easy. If anything business does not provide to the partners, error of omission. Now business can provide. How business will provide? Business will not call A, B, C, come here, take this interest on capital. No. Whatever business wants to pay to the partners, business will credit their capital account. Always in business, remember this. Whatever business needs to pay to the partners capital account will be credited. So interest on capital, if not provided by the business, now business will provide. How? By crediting partners capital account. So first you have to calculate interest on capital. Capitals are given 8 lakh, 4 lakh, 2 lakh, and interest on capital is 10%. Simply, it's very simple question. You can calculate 10% of 8 lakh, 80,000. 10% of 4 lakh, 40,000. 10% of 2 lakh, 20,000. These are the interest on capital. How you will write? In the particular column you have to write interest on capital. CR means credit, because you are crediting partners capital account. So A will get 80,000 from business as interest on capital. B will get 40,000 interest on capital from business. C will get 20,000. Now, as I told you, this total column is PL appropriation account column. So now think about PL appropriation account. If business is paying this much amount to their partners, so in PL appropriation account, where interest on capital we will show? In the debit side, because interest on capital is expense for the business. So all expense and losses are shown in the debit side of PL appropriation account. In the debit side, we will write two interest on capital, A, B, C, 80,000, 40,000, 20,000. So total, if you add 80,000 plus 40,000 plus 20,000, that is 1,40,000 is the expense for the business, which we will write in the debit side, to interest on capital. Now imagine there is no income in the credit side of PL appropriation account. Only this interest on capital we have to pay. So in the credit side, what you will write? If you have to balance the PL appropriation account, in the debit side, to interest on capital, you are paying to the partners these amounts. So in the credit side, no income. So these amounts is a loss for the partners, and this loss will be suffered by the partners. How you will write in the PL appropriation account? By divisible loss transferred to A's capital, B's capital, C's capital. And this 1,40,000, what is the profit sharing ratio given in the question? Equal. So 1,40,000 divided by 3. All the three partners will share equally. So you have to round off 46,666, 46,666, 40,667. Now, if in PL appropriation account, this is a loss suffered by the partners. Now again come to partners capital account. Everything you have to just imagine now for the time being. After that you will understand everything clearly. So whatever I am saying, try to understand. Now come back to partners capital account. Now this loss, that is 46,666, 46,666, again 46,667. Where you will write in the partners capital account this loss? Whenever any loss happens to the partners, it will definitely reduce the capital. So in the debit side of partners capital account, you will write two divisible loss and you will write in their respective accounts. Any doubt so far? Amrita, Roshni, any doubt you are having so far, dear? Yes?
No, ma'am. No, ma'am.
Okay. So now here what we are going to do, the same thing we are going to do. Interest on capital, first we have credited because it is income from partners point of view. So their capital accounts will be credited. Simply CR. Credited means they will get this amount from business, 80, 40, 20. Partners will get from business. Credit means. Again we have to debit partners capital account. Why we are debiting 46? Because this is loss. We have debited. Now we have to do the adjustment. What is adjustment? Very simple. See, first A's capital account. Imagine this is A's capital account. A's capital account in the credit side 80,000 means A will get 80,000 from business. How much A needs to pay to the business because the loss A will pay to the business? 46,666 A will pay to the business. Debit. A's capital account is debited by 46,666. A's capital account credited by 80,000. So, how much credit balance A will have in his capital account? 33,334. Always check the sign. Suppose credit sign is big, then you have to write credit. Debit sign is more, like the amount of debit is more than credit, write debit. You have to minus, subtract you have to do. Now B. B needs to get from business interest on capital 40,000. At the same time, B will pay to the business the loss 46,666. So, how much more B will pay to the business? 6,666. So, B's capital account will be debited. As I told you, whatever partners needs to pay to the business, their capital account will be debited. If partner needs to get anything from business, their capital account will be credited. Now C. Interest on capital C will get from business 20,000 and loss C needs to pay to the business 46,667. So, how much more C will pay to the business? 26,667. So, his capital account will be debited by this amount. Now, this 1,40,000 is what? Settled down. No balance in this. Now, how you are going to pass that single journal entry? You are going to get marks for this single journal entry only. Adjustment table is the part of the working note. But without preparing adjustment table, it is not possible to pass single journal entry. So, it is compulsory. You have to show it in working notes and journal format you have to prepare properly. Narration, everything you must write. I didn't write anything. I didn't follow the journal format everything, but you must follow. Whenever you solve question, properly put the lines, date, particulars, ledger folio, amount, debit, credit, everything. Pass the journal entry and write the narration, then close by putting one line. Now, by seeing down, which account is credited, which account is debited, you have to write. Like two accounts, two partner capital accounts are debited. So, first we always write the debit. So, B's capital account debit 6,667. C's capital account debit 26,667 to A's capital account. A's capital account is credited. CR means credit, DR means debit. 33,333. Debit, credit matches. What narration you will write? Being omission of interest on capital adjusted. Please tell me any doubt you have in this question, Amrita, Roshni.
No, ma'am.
Okay, fine. So now page number 32. A, B, C are equal partners. So again there are three partners A, B, C. Equal partners 1:1:1 is the ratio. With capital of 6 lakh, 3 lakh, 1 lakh. A has 6 lakh capital, B has 3 lakh, C has 1 lakh. Interest on capital is provided at the rate of 10% per annum. You have to understand the question, read the question very carefully. Just read it very carefully. Interest on capital is provided. You have to understand the meaning. They are not asking you to Provided means already interest on capital at the rate of 10% is paid by the business to the partners. They are not asking you to provide. Provided means already paid. So no need to do anything on interest on capital. This type of question they will give to make you confuse whether you are able to understand the language or not. That is why focus on question. Provided means already paid. No need to, if you pay again interest on capital, the question will go wrong. Provided means paid. No need to touch interest on capital. Don't do anything. Now the next line. After closure of books, it was found that salary of rupees 70,000 to A and rupees how much 50,000 to B was omitted. So after closure of book means preparing trading PL balance sheet on 31st March. After preparing this final accounts, it was found, the business found that salary should be paid to two partners. Who are those? One is A, another one is C. How much? A should get salary 70,000, C should get salary 50,000. But business did not pay. So it was omitted. Pass adjustment entry means we have to pass one single journal entry. Again, you have to prepare one adjustment table. You have to write particulars. I didn't write, you have to write particulars. Then there are three partners, three amount column, A, B, C and total. As I told you, whenever you are writing A, B, C, imagine these are the partners' capital account. And total means PL appropriation account. In this way, you have to imagine and do the question. Now, what was not paid to the partners? Salary. Salary also to two partners not paid. One is A, one is C. Now pay it. You have to rectify the mistake. If any amount, anything is not paid by the business to their partners, now you have to pay them. After the business comes to know that these amounts were not paid, now you can pay. So you can pay means again, you cannot call ABC and pay in hand. No. They have their capital accounts with the business. So business will credit their capital accounts whenever anything business wants to pay. Remember this very important concept. And whenever partners needs to pay anything to the business, partners capital account will be debited. Now salary, business will pay to A and C. So their capital accounts will be credited, CR. And salary is already calculated in the question. There was only one twist, interest on capital provided. If you are in hurry, you don't read the question carefully. Maximum students, what they will do by reading the question, in order to solve the question quickly, they will just provide interest on capital, entire question will go wrong. So please don't do it. Take your own time to read the question. Solving is not a matter. If you don't read the question carefully, it will go wrong. That is why there is a twist in this question. All these questions have already come in boards. So do practice. Now, so salary, you have to write credit. Capital accounts of A, 70,000 will be credited because A needs to get salary from business. Again, C needs to get 50,000. Total how much? 1,20,000. Again, when you come to this total column, automatically it should come to your mind. Total means PL appropriation account. Just imagine. If business needs to pay salary to A and C in PL appropriation account, where we will write debit side. Why? Because it is expense. So to salary, A's capital, C's capital, 70, 50. Again imagine in the credit side, do we have anything, any income? Do the business gets any income from the partners? No. So this 1,20,000 is a loss. Imagine PL appropriation account. You are balancing now PL appropriation account. So in the credit side, what you will write? By loss, divisible loss, transferred to ABC. All the three partners, they will share this loss in equal ratio. That is 1,20,000 divided by 3. If profit sharing ratio is given, you can apply that ratio. In this question, it is equal. So 1 is to 1 is to 1. 40,000, 40,000, 40,000. Each partner needs to share this loss. So divisible of rupees 1,20,000 in 1 is to 1 is to 1. Again, if any loss is suffered by partner, come back to partner's capital account, where you will show the loss of the partners. Any loss suffered by the partners will reduce their capital. If any amount is reducing their capital, we always show in the debit side of partners capital account. So again, partners capital account will be debited by 40, 40, 40. 40,000, 40,000, 40,000. DR means debit. First, we will credit partners capital account because they needs to get salary, and after that when we close the PL appropriation account, the loss of salary will be shared among all the partners in profit sharing ratio. Any doubt so far? Amrita, Roshni, you are understanding past adjustment questions? Yes? Roshni, Amrita, are you able to understand these questions?
Yes, ma'am.
Okay, fine. So now simply you have to check A will get from business or A will pay to the business. See, salary business needs to pay to A 70,000. Now this 40,000 A needs to pay to the business because it is loss. So finally A will get from business how much? 30,000. So A's capital account will be credited by 30,000. A needs to get from business 30,000. In the same way, see B. B nothing. B is not going to get anything from business, but B needs to pay the loss to the business 40,000. So again B's capital account will be debited. What about C? C needs to get salary from business 50,000, but C needs to pay 40,000 loss to the business. So finally C will get 10,000 from business. Credit. His capital account will be credited. And 1,20,000 cancelled. No balance in PL appropriation account. How cancelled? I already taught you. Now, just by seeing this credit debit, you can just pass the journal entry. Two capital accounts are credited here. Only one capital account is debited. So, B's capital account debit, 2A's capital, 2C's capital. B's capital account is debited by how much? 40,000. A's capital account credited by 30,000. C's capital account credited by 10,000. What you will write the narration again? Please follow the format. Write the narration, put the line, everything you must do. Don't follow ma'am for all these things. Otherwise your marks will be cut. Properly follow each and everything. Don't use any shortcut, please. Being salary omitted, now adjusted. Question is clear to you, Roshni, Amrita?
Yes, ma'am.
Okay, fine. Now we will move to next question. Page number 33. ABC, again 3 partners are there in a partnership business. Profit sharing ratio is given 3:3:2. Following items were omitted. The same, this type of question only. What? After closure of the book of accounts, it means after preparing the final accounts, these things were omitted, business found. What are the things which business did not provide to their partners? A and C were entitled to a salary of rupees 1,500 per month. PM means per month. A and C, 2 partners needs to get salary 1,500 per month from business. But business did not provide. Now we have to provide them. We have to pay them the salary. Fine. Next, B was entitled to a salary of rupees 4,000 per annum. Again, be careful. What the question says, per annum. If you don't read the question carefully and you multiply by 12 thinking that it is per month, again there will be mistake. So read the question carefully. B was entitled to a salary of rupees 4,000 per annum. No need to multiply by 12 because already 1 year salary is calculated. Per annum means yearly salary. Why to multiply by 12? It is not per month, per annum. So you have to write just as it is. Pass a single adjustment entry. The same adjustment table, particulars, 3 partners ABC total. Again I am repeating, ABC means these are the partners capital account. Apply the logic, apply the concept, and total means PL appropriation account. So Roshni, in your school how they taught you this past adjustment question?
Ma'am, they are going to teach, ma'am.
Oh, they didn't started.
They didn't finish the starting.
Oh, oh,
Yes, ma'am.
fine. Amrita, have they started in your school, dear?
No, ma'am.
Okay, fine. No issues. Fine. So now, salary, as I told you, A, B, C, three of them needs to get from business. So credit their capital account, salary CR. CR means credit. A will get 18,000. How? 1500 per month means multiply by 12. You will get 18,000. B's salary already calculated. 4,000. No need to multiply by 12. 4,000. What about C? Again C, 1500 per month only, multiply by 12. The same 18,000 you will get. So A, B, C needs to get salary from business, 18,000, 4,000, 18,000. What is the total expense of the business? 40,000. So this 40,000 will be distributed among the partners in profit sharing ratio. Again, as I told you, once these are the expenses for business, imagine PL appropriation account. So in the debit side you will write to salary A, B, C. In the credit side you have no income. Business has no income. So this is loss for the income. This loss will be shared among the partners in profit sharing ratio. How you will distribute this 40,000 loss for the business? In which ratio? 3:3:2 already given in the question. So 40,000 into 3 plus 3, 6, 7, 8, 3 by 8. 40,000 into 3 by 8. 40,000 into 2 by 8. If you solve, you will get the loss for A 15,000, loss for B 15,000, loss for C 10,000. Now adjustment you have to do. Salary A will get from business 18,000. The loss A needs to pay to the business 15,000. So 3,000 more A will get from business. Credit capital account of A. What about B? B will get salary 4,000 from business. B will pay 15,000 loss to the business. So B needs to pay more, how much? 11,000. So B's capital account will be debited. As I told you, whatever partner will pay to the business, their capital account will be debited. C will get salary from business, how much? 18,000. But C needs to pay to the business loss of 10,000. So finally, C will get from business 8,000. So C's capital account will be credited by 8,000. Now we have to pass single adjustment entry. How you will pass? By seeing one account is debited, two accounts are credited. First write the debit account, B's capital account debit. By how much? 11,000. 2A's capital account 3,000. 2C's capital account 8,000. Being adjustment entry passed for rectification of error. Any doubt in this question? Amrita, Roshni, any doubt, anything you are not able to understand? Please ask me. Anything?
No, ma'am.
Fine. Page number 34. 3-4. RS were partners sharing profits in 3:2. There are two partners, R and S. And what is their profit sharing ratio? 3:2 given in the question. Fixed capital, again there is a twist. You have to understand fixed capital means whatever adjustment entry you are passing, you have to write A's current, not A, here R and S. So R's current account, S current account. So current account you have to use. Why? Because capitals are fixed. Whenever capitals are fixed, we pay to the partners through current account. We don't use fixed capital. We always pay or we always take from partners. We means business through current account. Dealings are done through current account. Always remember. So fixed capital of R is 10 lakh. Fixed capital of S is 15 lakh. The moment you read the question, something automatically it should come to your mind so that you don't make mistake. As per partnership deed, interest on capital at the rate of 10% per annum. So interest on capital needs to be provided to the partners. What is the rate? 10% per annum. Interest on drawings 12% per annum. Interest on drawings should be charged from partners. Partners will pay interest on drawing to the business. What is the rate? 12% per annum. Now, ours drawing were 10,000 per month. PM means per month. Drawn at the end of every month. So, our drawing amount is given 10,000. Date is also given 10,000 per month. Drawn at the end of every month. You have to apply that formula which I have taught you. As drawing were 20,000 per month. Drawn in the beginning of every month. So, this is even drawings. So, every month the drawing is made at fixed amount and date is also fixed. So, apply the formula and solve. After finalizing the book, meaning is same. Finalizing the book means closure of book. Book means they are talking about final accounts. Trading PL balance sheet already prepared. After that, these errors were found. This is the meaning of this line. It was discovered ours interest on drawing was omitted. Again, there is a twist. There is two twists in this question. One, fixed capital. So, if you don't write current account, your marks will be cut. Second thing, read the question carefully. Whose interest on drawing was omitted? Who did not get interest? Means business did not get interest on drawing from which partner? From R. What is the meaning of this? S already paid interest on drawing. So, you should read the question carefully. Now, calculation of R's interest on drawing. Because if they don't write this, R's interest on drawing was omitted, then you can calculate interest on drawing for both the partners. But they are saying it was discovered R's interest on drawing was omitted means only R did not pay interest on drawing to the business. You have to understand the question. So, calculation of R's interest on drawing. How the drawing was made by R? R's drawing were 10,000 per month drawn at the end of every month. So, 10,000 per month. So, for 12 months, how much R is drawing? 1,20,000. What is rate of interest on drawing rate is given? 12%. Then, as I told you, go for the formula. It is 5.5 by 12 every month. Okay. End of every month it is 5.5 by 12. If you solve 1,20,000 into rate 12 by 100 into time period 5.5 divided by 12, you will get 6,600 interest on drawing. Any doubt, Amrita, Roshni? Please understand the question first. Don't hurry to solve it. Amrita, Roshni, any doubt?
No.
Okay.
No, ma'am.
Okay, dear. Why I am telling? Because maximum students make this mistake. I know. That is why I am focusing and trying that you don't make the same mistake. Now, partners adjustment table as usual you have to prepare. Okay. And one more thing. You have to be very careful. Here they are saying interest on capital. Okay. What they are saying, interest on capital at the rate of 10% per annum. Interest on drawing 12% per annum in the question they are saying. But last line of the question says it was discovered only interest on drawing R did not pay. It means interest on capital was paid by the business to their partners because they did not write that interest on capital was not provided. Again there is a twist. If you see this question, there are 3-4 twists. First, fixed capital. So you have to do the dealings with current accounts. Second, about drawings, there are two partners, but they are telling you that R's interest on drawing was not received. Third, they did not tell that interest on capital was not provided. So, you should not calculate interest on capital and provide to the partners unless and until they say. So, this is the 3 twists in this question. Already these questions came in the boards. So, now, first we have to prepare an adjustment table.